It's Monday, the 7th of November, 2011, and in this Boardroom Talk special podcast, Sisa Ngebulana, the chief executive of Rebosis, joins us now. Sisa, it's a fascinating company, the first black-managed and substantially black-owned property trust listed on the Johannesburg Stock Exchange, which is the good news. The bad news is you listed in May this year at 10 Rand a share, or after a private placing at 10 Rand, and your stock just can't get above it.
Yeah, yeah, interesting. I think until you really prove yourself to market at times, you have to wait for the right opportunity. In fact, if you look at our NAV at the moment, with our value uptick since year end, we at 10 Rand 30, and suddenly our share price is at a discount to our NAV at the moment. You want it the other way around.
Not 13 Rand 30.
No, it's 10 Rand 30.
10 Rand 30. So
Yeah.
you're at a little discount to...
Share price is discount to NAV. Yeah.
But the thing was, you would have anticipated if there was enough interest to give you nearly 2 billion Rand in a private placing at 10 Rand a share, that those same people who invested the money would be keen to come along and put a little bit more in, or at least see some kind of premium on their share price. Why do you think that is, that you haven't budged above the issue level?
Well, I think it's really, thin volumes that have moved the price, very small volumes actually. But we've got very good institutional support, even though we are small cap, but very good support in the market. We think just over time it's gonna correct itself. We should be at a premium to our NAV actually, but it's just a matter of time. We're not worried about it. There was a point where it went to 10.40, but we're back at 10 Rand.
Who are the institutions that have invested in your stock?
We've got Sanlam, we've got Old Mutual, we've got the Liberty Standard Bank Group, we've got government employees pension fund, we've got Coronation, and a whole lot of fund managers who participate in the property space. So there's quite a lot of good institutional support that we've seen over time.
Good spread. Do you think as a black managed property trust that gives you an advantage?
Well, you've got to, I think insofar as the market, investors, it doesn't necessarily do that. You've got to prove yourself just like anybody else. You've got to deliver.
But it is interesting that you say in the commentary to the results today, and these are your maiden set of numbers, that you let much of your space to the Department of Public Works. Now, I guess it doesn't hurt that you're black-owned, or primarily black-owned and black-managed.
Well, certainly when it comes to government, 40% of our income is derived from the public space, public sector. Good tenant exposure for us is sovereign. You literally shielded from insolvencies and liquidations and so on. So it's a very good underpin for the stock, for our properties, and long-term leases because they tend to spend a lot of money on those buildings, and single occupancy type buildings, and we've got chunky properties, as you'd see in our commercial portfolio, 3.75 billion out of just 8 properties. So it does, and we in fact looking at capitalizing on that government because of that of the good credentials we have from an empowerment perspective.
Now, I'm hoping that you're not going to pull your punches here, because we had Mark Weiner on our program last week complaining and actually giving us some insights into how difficult it is to work in areas outside of Gauteng. You quite heavily invested in the Eastern Cape. He was outspoken against the Eastern Cape. He says lots of corruption and issues to deal with there. Are you finding a similar picture?
I think he was talking at local authorities. We don't have any exposure with local authorities whatsoever in our portfolio. The only impact of bad governance with local authorities would be if they were to hike rates beyond the norm of, say, 10%, which we've projected going forward, which would impact on our focus, which is highly unlikely. The other nuance would be if planning authorities don't cooperate when you want a development to go ahead, and you just don't have the people with the right skills, or there's no capacity to deal with permissions and it delays you. We've seen that, particularly in East London, pursuant to us opening Hemingway's Mall. We're dealing with those things. You need a lot of patience in dealing with these sort of things. But from a tenant perspective, we don't have any exposure to local government.
Nor, I presume, would you like to have?
No, certainly. Local government is not in our space. We do have one local government lease with the Joburg Council, in our portfolio in building Upper Square, and they've been very good tenants, I must say. So it does depend which local authority you're talking about. That being the largest metro after Ngebulana, so it's got all the makings of a very good profile tenant.
Cesar, what about this Bloot Street Mall that was supposed to have been the property that was supposed to have been transferred? It's not a small property at all. It's in the 356 million rand, you say, is the valuation of it.
Yeah.
What's going on there?
The property is under leasehold from the council. So, in other words, the previous seller developed the mall on a land instead of having a full title, had a 30-year leasehold from the council. Mall opened about 2008, so it's just run over 3 years now. So when we took transfer, we had to get consent of the council, and much as management was very happy to get that going, there were going to be local government elections, and they felt that the new council must just give its nod to it, which delayed us. Local government elections happened, I think, late May to early June, and then it found itself to the council, and it was approved in July, and it just got lodged this morning. So in the next 2 weeks, we should see that transfer going through. So it's actually history now.
But it was embarrassing for you. You had a prospectus which said you would come out with a certain number.
Yes.
Because this transfer was delayed, you actually missed that number. Not by much, but if you were on Wall Street now, they would have smashed your share price.
No, it's hardly a cent. It's 0.7 cent. Although it affects the gross number from a gross income perspective and expenses, but because it was coming out of our gearing, we didn't draw on those facilities yet. As a result, the net number and the distributable number is affected by very little.
Still irritating, though, because it is the first set of results that
Absolutely.
you have, and you'd like to have beaten that forecast.
I agree. In fact, if you take that impact, it's 1.6 million rand impact against our shortfall of 1.4, we would be above the forecast.
But what is interesting is you've been quite aggressive in telling us what you expect to make this year or expect to distribute this year. And at 85 cents a unit, that's an 8.5% yield to shareholders. I suppose that is something to look forward to.
Absolutely. And we've been quite conservative. If you look at our listing focus, it was 88.3. In fact, to be precise, 88.29. We have given a range this time, and at the bottom end it's 85, rising to the 88.3. And the only reason we do that is because given the macroeconomic conditions that are changing all the time, highly indebted consumers, it might not bode well for retail going forward, and we might see some casualties in small tenants. And we just thought, let's be conservative and give a focus that has got a bottom end.
How much gearing are you prepared to take on your balance sheet?
We have, I think, at the moment, we at 40%, or 39.8 when Bloot Street comes in, 33 at the moment without Bloot Street. The upper end is about 50%. We think we're in a good range at the moment. Range between 40-45 in the short term is good. In the medium term, we certainly want that range to sit around 35%. Particularly in an environment, interest rate cycle at the moment is very good. If you're raising debt at the moment, it's very cheap, cheaper than equity. And it's just a prudent thing to access that while it's cheap.
Another interesting point, again, going back to Redefine, which is one of the big daddies. I see you've got Janice Finn, who's ex-Redefine in your team.
Yes.
But they've gone to the corporate bond market and started raising money there, which is good long-term money, as you say, very cheap.
Yes.
Is that an option that you've considered?
Look, for us, it actually would be even better. I think we'll have a very good rating on our corporate paper, given the exposure, a very defensive portfolio with longer-term commitments in terms of leases that we have on single-tenanted buildings, sovereign exposure, and even our retail, the regional dominant 80% of the tenants being nationals, which is grade A tenants. So that just bodes well for a very good corporate paper. Yes, we are exploring that. We will be looking at doing that. We are looking at a couple of acquisitions at the moment, which are quite chunky. We've hesitated coming to market with small numbers. So we'll issue cautionaries at the appropriate time, but we are exploring that.
It looks like that area could start getting a little crowded, though, when you say chunky acquisitions. What numbers? Is it in the region of the Bloot Street Mall, 350 million up?
No, bigger than that, yeah.
So it would be
much bigger
more than
than
that.
that.
And within the JSE itself, are there not other listed property portfolios or listed unit property trusts that might make a good fit for you?
Well, yeah, we certainly. I mean, we've got a very good management team. I think you've mentioned Janice. Mike also joined us, COO, and I've got a very good management team of over 100 people there, highly committed, and that bodes well for even looking at other funds who might otherwise not have a team as robust and good as that. For us, it provides some opportunities. There are some funds we are looking at capital, but it's still far distant.
What kind of investor should be looking at your shares?
I think an investor is looking for stability in income streams and good growth. I think given our gearing at the moment, we are looking at very good growth, boosted by the fact that we are 40% geared at low cost of funding. So you've got rental income at escalating at about average 8.6%, boosted by the leverage of gearing that we have above that. So the range is between 8.6 to about 12% in the following year, into 2013. So we will be very attractive to an investor looking for very good income stream plus a good capital growth, because just a value uptick from the listing date to year end, 3.5 months, we've had a value upswing of 110 million rand, which gave rise to the NAV of 10.30 per share, in essence. So, good capital growth and good solid income stream.
Sisa Ngebulana is the Chief Executive of Rebosis.
Thank you.